Today we're going to take a closer look at the semiconductor industry, more importantly the manufacturing aspect of it. I do want to say the semiconductor market is a very tricky one because it's one that's typically very cyclical for numerous reasons. Outside of your typical tech refresh, you also have consumer spending being an important force of this kind of market because a lot of companies in the semiconductor industry create products for consumers. So if consumer spending is expected to decrease, we might also see a decrease in semiconductor stocks. Unfortunately, things are a little bit tricky right now because in the past few years we have been hit with things like the semiconductor shortage as numerous emerging technologies require more chips. So typically this is a market that has a nice amount of reasons to be bearish, but now you also have a lot of reasons to be bullish. And today we're going to take a closer look at what the market is showing right now, especially for the second half of 2022. So I am a shareholder of TSM, so I want to take a closer look if what I'm seeing now is deterring me from being an investor or kind of changing my mind. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, my Discord channel and my tech channel. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so let's start off with taking a closer look at Taiwan Semiconductor Manufacturing, traded under the New York Stock Exchange as ticker TSM. This is the global leader of manufacturing and semiconductors with over 50% of the market share, which is insane. Right now sitting at $80.18. As I am recording, the stock is down 1.6%, and we can see from its 52-week high, the stock is definitely down a nice amount, down over 42.9%. So there definitely has been better days for TSM. And this is also a company that pays a nice dividend of roughly 2.93% at the moment. All right, so now let's take a closer look at this image that TrendForce posted on July of 2022. They kind of give us a forecast for the second half of 2022 for foundry capacity utilizations. For those not familiar, foundries are the manufacturing buildings of these semiconductors, and there are different sizes, and each size we can see this is a market that, because of semiconductor shortage, has been working at near or at 100% utilization rate for the past few quarters, for almost the past 2 years, right? But now things are changing for numerous things. One is we are seeing a decrease, or expected to see a decrease, in consumer spending. So there are certain kind of sizes in semiconductors that might experience instead of being 100% utilized, they're going to be somewhere between 90 to 95. Some also are expected to be somewhere around 90 with potential downside risk, while others are expected to not shift as much, between 95 to 100%. First, let's take a closer look at which type of production lines are expected to see the biggest decrease, and it seems to be anything above 20 nanometers. I do want to say most of these chips are ones that deal with the consumer market, so it does seem like the consumer market is expected to decrease. Now, if we take a closer look at the advanced nodes, and these are things below the 20 nanometers, these are the ones that are expected to see the least amount of declines. For example, the utilization rates are expected to be somewhere between 95 to 100%. The reason being is these advanced processors are used for things like CPUs, GPUs, ASIC, 5G, FPGAs, and other types of accelerators, and these are things normally used in data centers and other types of servers, 5Gs, and things dealing with high performance computing. So while the consumer market is still expected to decrease, we can see like the enterprise market and these data center markets are still somewhat strong for these semiconductor companies. And that's why it's very important to understand which semis produce a nice amount of consumer products and which semiconductors produce a nice amount of solutions for data centers, because those are the ones that I believe are going to be able to be really strong during this consumer downtrend. Now let's take a closer look at TSMC. We saw that the advanced nodes are the ones that are expected to decrease the least, or have almost no changes at all. Great news for TSM investors, roughly 64% of their most recent quarter revenue came from advanced node. 20% came from the 5 nanometer, 30% came from the 7 nanometer, and 14% came from the 16 nanometer. So if we take a closer look, anything below 20 nanometers is still expected to have somewhere between 95 to 100% utilization rate for the second half of 2022. So that is good news for TSM. The other 34% of total revenue definitely has a higher chance of seeing a bigger decline, but we can see majority of revenue is still looking strong. For those not familiar, TSM is actually reporting their earnings this upcoming week on July 14th. I do want to say I'm very interested to see what they have to mention about the outlook for the second half of the year. And depending on that outlook, I do believe it's going to kind of move the overall semiconductor market on either a positive direction or a negative direction. This is a company that does report their monthly revenue, so I don't think the results that we are going to see this quarter are going to really move the stock. What investors are going to be really cared about is that outlook, like I mentioned. But I do want investors to take a note of this. TSMC for June, they reported a 18.5% year-over-year growth. So that's still very strong growth compared to the same time last year. If we take a look, that 18.5% is actually the smallest year-to-date monthly growth. The previous one was on March, where that month they grew over 33% year-over-year, and the largest was actually on May, which they grew 65% year-over-year for that month. So we can see things are slowing down, and again, seeing this with kind of utilization rates also decreasing, we can see that, hey, maybe this might not be that growth story anymore. But like I mentioned before in numerous episodes, and like TrendForce mentioned in this report, they still believe that a lot of these emerging technologies like data centers, like 5Gs, FPGA, CPUs, and all these are going to be a strong reason for these semiconductor companies to have some growth in the upcoming quarters and the upcoming years. So for me as an investor of TSMC, this is not a reason for me to sell, but I do believe in the short term there are some risks, as maybe revenue might be slowing down, but in the long term of things, technology continues to evolve, and these emerging trends that we are seeing are going to be fueled by semiconductors. So long term bullish, but in the short term there could be a lot of volatility. I will definitely be doing an episode on their earnings this upcoming Thursday, so make sure to subscribe, make sure to hit the thumbs up, and see you guys next time. Peace out.